Ben, we have a great episode because guess what? UWM and Rocket are fighting again. When was the last time this happened? March 5th of some year, right?
Has it ever really stopped?
I don't think it has stopped. But that's what happens when you go after a kid's dad. The kid grows up and he's going to come after you, and I think Absolutely. That kid is winning, right?
Yeah.
Ben, what are we talking about today?
So we're going to talk a lot about that, about UWM versus Rocket, making a lot of noise in the sports world and in the finance world. Also going to go over some tips and tools to be successful, how we apply it to our industry and what it can do for anyone. I mean, I think they really will apply to anyone. I'm also going to go over some current news in the market with the new jobs report that came out and what we're expecting from all of that.
Area median incomes too.
Yes.
Is that the tips and tools? Okay.
Yeah. So that's part of that. Yeah, because there's some new rules, and this kind of goes into the UWM Rocket piece as well.
Cool.
With new area median income requirements. So
can I start? Can we start? Can we get on the first subject? Can I start the first subject?
I know you were anxious to start.
Oh, I am anxious for this because I have a lot of opinions on this, and I think that there's a lot of bad actors in this industry. But UWM and Rocket are at it again, and you see these posts going back and forth. And here's how it started, and people don't want to admit this, right? So there's an anti-Matt Ishbia crowd. There's a pro-Rocket crowd. There's a pro-Matt Ishbia crowd. Well, here's how it started. Tim Berkmeyer, him on LinkedIn, president of Rocket Mortgage, says, did you know that Rocket Mortgage is hiring local loan officers all over the U.S.? With Rocket Mortgage Local, you can lend where you live and continue to build relationships with clients and real estate agents in your community. In this role, you'll receive the autonomy of running your own business with the backing of the #1 mortgage company in America, actually #2. That means Rocket rates, branding, technology, marketing, and more. Interested in planting the Rocket flag in your community? Click the link below. Okay. So I'm a mortgage broker. Rocket Mortgage has a wholesale lender. What does that sound like to you?
I mean, that sounds like they're going out and directly competing against you in your communities.
And now they're on TV. They're on every football game. It's Rocket Mortgage this, Rocket Mortgage this. I'm going to tell every single mortgage broker out there, anybody who's in the mortgage channel, if you are working with Rocket Mortgage, you are giving your competition money to compete against you. Stop doing it. Stop doing it. I have contemplated, should we sign up with Rocket Mortgage? No, man. Like, we should not. So Matt Ishbia, and this is what really started, he chimes in. Seeing big companies try to systematically hurt consumers and the broker channel is why UWM will always stand up for what is right. Advocate for brokers and drive consumers to find a local mortgage broker at findamortgagebroker.com. When I talk about All In years ago and how Rocket is purposely dismantling the broker channel, ultimately hurting consumers, this is a perfect example. HMDA data shows consumers save $9,400 when working with an independent mortgage broker, and Rocket Mortgage Local is a blatant slap in the face to all independent mortgage brokers. This latest stunt to lure loan officers back into retail and steer consumers away from brokers is defined as, quote unquote, building relationships with clients and real estate agents in your community and the autonomy of running your own business. This is exactly what a mortgage broker is. Rocket is hiring local loan officers to compete directly with mortgage brokers in communities where brokers have been building their business for years. And thank you for somebody telling the truth. And I have to say this, and then I'm going to get into what Rocket's response is and the SVP of wholesale, because here's the deal. Matt Ishbia is 1,000% right on it. No matter what Matt Ishbia is doing, maybe with other ventures and so on and so forth, Matt Ishbia is 100% right. I am now competing against Rocket Mortgage in my local community. I'm competing with Rocket Mortgage, who is sponsoring Super Bowl ads. I'm competing with Rocket Mortgage, who's, Clemson, South Carolina are playing, and it's sponsored by Rocket Mortgage. When someone watches golf, it's the Rocket Mortgage Classic. I am now competing with them, but they want to say, hey, no, it's fine. We have a wholesale channel. We support the broker community, blah, 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 so on and so forth. No, you don't. First, you go after the realtors to try to get the realtors to partner directly with you. Now you're going after loan officers saying, plant your flag with Rocket in your local community. You might as well be Movement Mortgage, who I'm competing against. Here's my favorite part about it, though. Follow the money. Ben, you were at Rocket for years.
Yeah.
Does their wholesale division make money?
No. At least at the time I was there, it did not.
Does their retail division make money?
Yes.
So do you think that Rocket's all in on the broker community?
I mean, no.
They're
They
not
are
all in.
there. They are there and pushing strictly to beat UWM. I truly believe it is an ego thing to directly compete against UWM.
I had a conversation with a realtor who used to be at Rocket Mortgage today. He brought his clients in here because he trusts us. And he works with us, and he's a local realtor here, and he brought his business to us instead of some people he could have brought it to, because he knows that we're better than them. And you know who I'm talking about.
Yes.
Long story short, he said to me that his last few years there, which were a few years after my last few years there, and right around the same time you left, there was never any, hey, we're going to focus on what we do, have the best technology, have the best process, have the best this, have the best that. There was no focusing on that. There was focusing on what does UWM do and how can we compete with them. That's called being reactive. That's not being proactive. And in a business, I preach this all the time, you better be proactive if you want to be successful. Focus on yourself. Focus on what you're doing internally as a company. Focus on that. And if you focus on that, you will win and win and win. Focus on being the best, and then you will win. Rocket stopped doing that a long time ago. I saw it coming when I was there, which is why I left. You stayed a little bit longer. The person who was here stayed a little bit longer. A lot of our friends in the industry who are really good at what they do, they stayed a little bit longer. And I'm not sitting here just trying to bash Rocket and saying they're a terrible company, because they're not. But what they are is they're retail focused. Broker channel takes a back seat because they don't know how to be profitable in their broker channel. So when they do stuff like this and be a local Rocket LO and connect with your local blah, 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 and use our technology, well, your technology is not that good. Right. One. And number two, you're competing directly with the mortgage broker that you're trying to claim to support. And then your SVP, the SVP of all of wholesale, Mike Fawaz, post on LinkedIn, right? And so Mike, and we're going to have this posted in our clips, is it considered insulting or flattery when a noisemaker struggles to keep your name out of his mouth? I'll choose the latter. Earlier today, Matt Ishbia, the broker industry's resident loudmouth, decided yet again to have a tantrum toward Rocket Pro TPO on LinkedIn instead of focusing his energy on his partners. I want to clear up his claims and make sure you know the truth. There's nothing new that was uncovered in any LinkedIn post. For years, Rocket has had some loan officers who work remotely, and just like every other loan officer across the country, they build relationships in their neighborhood. They connect with real estate agents near them. They talk about home loan options with those they meet at Little League games and block parties. Again, this is what every good loan officer in America does each day. Not quite the smoking gun Matt falsely tries to make it seem, but he should make sure his house is clean before attacking others. You see, unlike his company, our broker partners can rest assured we also won't set up thinly veiled net branches. And they post a LinkedIn article, and I'm going to read that from, I think it was, I forget who it's from, but I'll read that in a second. And what has to be the worst kept secret in the industry? You have to ask yourself, why is Matt so obsessed with Rocket? Is it for purely altruistic reasons as the self-appointed savior of the broker channel? I think there's something else behind it. Without Rocket, there would be no other large lender standing in the way of Matt turning America's mortgage brokers into UWM net branches. I am meeting with hundreds of our broker partners here in Detroit this week for our all access event. One piece of feedback I consistently hear when I talk to our partners is the appreciation that Rocket does not nickel and dime them. They also tell us they appreciate being treated like adults without silly ultimatums placed on their business. We provide them technology and support that only a well-capitalized lender like Rocket can provide. We treat our broker like true partners, and I know they see through the constant noise in the marketplace. Thanks for reading. I will now turn my attention back to where it belongs, not to other lenders, but to the brokers I serve every day. Let's dial it up.
That's a really long quote for not paying any attention to it.
Well, a couple of things. Let me break that down, and I'll get into the article he posted, because I think we have to talk about the article.
We do.
He calls Matt Ishbia a loudmouth. I think Matt Ishbia has done more for the broker channel than Rocket could ever dream of doing. And I think that if the broker channel died, that Rocket would be happy, because then all their focus would be on retail, and they wouldn't have to worry about their wholesale lender, the wholesale portion of their business losing money. I think that anybody who can't recognize the fact that Rocket is a retail company first is blind. And I think any broker who just brings their business blindly to Rocket, I believe that they don't understand that they're giving them money and they're helping them compete against themselves. Now, with that being said, would I bring business to them if it made the most sense for my client?
Exactly.
If it made most sense to the client, which I am waiting on the UWM lawsuits to be settled, because I don't think what UWM did can be held up in the court of law. Now, we'll see, and we'll see how that plays out. But we are a UWM partner, and we will not send business to Rocket. And I've told Rocket this until those lawsuits are settled, right? So once the lawsuits are settled, would I bring business to Rocket? Yes, I would bring business if it made the most sense for my client, because I'm bringing my client as a mortgage broker. I'm going to save them that $9,400 per transaction.
Exactly.
Now, with that being said, Matt keeps going on and on here, and he wants to say things like UWM nickels and dimes you. No, they don't. They offer you options that allow you to grow your business without doing what we're doing and going out and hiring people and training them and so on and so forth. It allows you to stay a truly independent mortgage broker and maybe not grow into something bigger, while being able to expand your business and bring in more loans within your community. It's not nickeling, diming. It's called paying for a service. Rocket doesn't provide those services for free. Rocket doesn't even have the option to pay for those services.
Right.
Am I wrong on that? You look like you were looking around.
No, I mean, you're not wrong at all. Like, and that's the thing, like the benefit of being a mortgage broker right now in this market and every time is flexibility. There is way more flexibility here. It embraces competition because we're looking at 20, 25 different lenders. Where do you fit in your circumstances fit best as a person? Where do you fit best for your financing needs? That should include all of them, including Rocket, including Fairway, including UWM. We should not be told who we can and can't take business to.
Well, and I want to get on to the next part. Go ahead. Sorry, finish your thought.
Yeah, let me just finish up with what I'm saying with that too. Now, nickel and diming piece, no, that is not.
That's not accurate.
That's not accurate. Like, you have the option when you submit a loan there, you can choose, do you want to do it or not? They're upfront with you. Hey, it's built into pricing. Like, but maybe you have a client that does need that, or maybe you have a business structure. Well, that suits you best. Mortgage brokers are smaller businesses that allows us to pay closer attention to our clients, not the numbers, to our clients. This allows us options, which again, flexibility is what all brokers are about. Now, I mean, you mentioned something else too about, how UWM has their own like network channels and things that are purely UWM, and there are brokers, people who call themselves brokers out there who only use UWM, will not use anyone else.
Is that true though? Yeah. Are you 100% positive?
Your friend Brooke is one of them.
Yes, I guarantee you she uses other people. Motto Mortgage uses other people.
They can't.
She probably doesn't.
Right. At least on her personal website.
She's part of Motto Mortgage, and let me touch on that because.
But what I'm saying is but they're not true brokers if that's what they're doing.
Okay, so we're going to get into that part. Because I wanted to read the first part of the quote. Now, the second part of the quote, he says, not quite the smoking gun that Matt falsely tries to make it seem. And the original post we sent to Donovan and Brennan, they're going to edit this into the video, but it's literally Rocket Mortgage advertising for local loan officers. Maybe they've been doing it for years. And it's not quote unquote a smoking gun, but they're now advertising for it and trying to convince people to come over to Rocket as a loan officer and work for Rocket. Now, there's probably some brokers out there who struggle with compliance and who struggle with this and who can struggle with that. And instead of joining another broker shop, are going to be like, oh, well, I can stay independent by myself and not work with so on and so forth and broker channel. I'll just go work for Rocket because I work with Rocket anyways.
Right.
So you're telling me that's not taking from the broker channel?
Oh, 100%.
That's crazy. So maybe it's not a smoking gun. I don't think Matt Ishbia said it's a smoking gun. I think what Matt Ishbia said is this is just another example of Rocket competing with local mortgage brokers in their local market and caring more about their retail division than they do their wholesale channel. And anyone who's ever worked in their wholesale channel knows that Rocket cares about retail, and they care about their retail channel much more than the wholesale. And on top of it, I'll even go as far as saying that they would not be upset if the wholesale channel shut down. The only reason they have wholesale channel is to compete with UWM and to call themselves, and I'm just going to keep going a little bit, to call themselves the only big lender standing in the way of UWM.
It's crazy.
Crazy. They aren't the only big lender.
No.
And also, they aren't the number one lender in America. They had to have a wholesale channel and a retail channel to barely squeak out past UWM, who only works in the wholesale channel. And anyone who ever has worked with both companies knows that UWM blows them out of the water technology-wise. Rocket is a distant number 2, period, with the lenders we worked at. Period. So my issue here is, hey, man, I don't know you, Mike, but it seems like you love Rocket. And good for you. I'm glad you like your job as the EVP at Rocket Pro TPO. That's Executive Vice President. I am proud of you. You've worked really hard. You've made some great connections, and you moved up to the Executive Vice President. I'm not going to knock him for that. I'm not going to knock him for liking Rocket Pro, but I am going to knock him for being so biased that he doesn't see what his own company is doing. But when your company is paying you, I guess you have to toe that company line. Toe that company line, Mike. You are doing a good job. You are a great foot soldier for Rocket. And I'm on record to saying if Rocket had a better deal for my client, I would bring it to Rocket. But man, you're a foot soldier, bro. You know, you talk about wanting to do something in the broker channel, the wholesale channel. How about you start your own business and compete with Matt Ishbia? Because I guarantee at the end of the day, even though you're the EVP of the wholesale division of Rocket Pro TPO, third-party originators, I guarantee you that you really don't have much of a say there. But yeah, it's not quite the smoking gun. And then you post this article, and we'll get into that in a second. Let's see, what was the other part that was just like, this guy is nuts. He is really, they have a saying at Rocket.
He took Austin's position.
Nemec, which Austin Nemec's one of the nicest guys, and I don't think Austin Nemec would post something like this.
No.
He might say, hey, this isn't what the case is, but the way he posted this, man, like he sounds like he's pure Detroit, and that's not a compliment. You know, here's the deal. Like Rocket has this thing called eat their own dog food. This dude ate all the dog food. He ate the whole damn bag, not just the bowl. He probably put some dog gravy on that shit too. It is just, I mean, I'm looking at this and he's saying Matt's obsessed with Rocket. I don't think Matt is obsessed with Rocket. I think Matt's obsessed with the broker channel, which he operates in. And I'm going to tell you, Dustin Nolan responded to me today on LinkedIn. And it goes along with what this is. I said, Dustin Nolan's podcast is great, but he's very retail. He doesn't really like the broker channel. He said some stuff that comes off as he either isn't educated on the broker channel or he doesn't like the broker channel or he's retail biased, as he should be because he's in the retail side.
Right.
Well, guess what? Matt Ishbia should be broker channel biased. And I hate how they call us TPOs, third-party originators, like we're just some contract person. We are mortgage brokers. We are mortgage educators. We are mortgage advisors. We aren't just some third-party originator for your company, Rocket, because they call us TPO. You don't see UWM saying TPO about us, do you?
No, but is it really biased? Like looking at it, like those numbers that you read off about how much of a better deal you're going to get working with a mortgage broker.
So let me ask the other question I got for your guy. I'm going to call him your guy. It is proof. The other question I'm going to have for your guy is they tell us they appreciate being treated like adults without silly ultimatum placed on their business. So anybody who works with UWM and made the business decision to do that, are we not adults? Am I not an adult? Am I like, is he treating me like a child? Because I'll walk away at any point that it no longer benefits my business. But guess what? They're better than Rocket. So it benefits my business to go with them. Period.
Right.
Am I wrong?
I mean, we chose UWM for a reason.
Yeah, there's a reason that we chose UWM, and I don't agree with the ultimatum. And let me just say that the ultimatum was wrong. It's why I'm not a member of AIM. I won't pay money to somebody who put an ultimatum on us. But at the same time, it benefits my client going with them. And guess what? When we signed up with UWM, Rocket didn't even have the same product offerings. You know what they launched right after? A HELOC to compete with UWM. They were a step behind. Then they were looking into non-QM, and then they were looking into new construction. They are always a step behind of UWM. Matt Ishbia has eaten their lunch for about 8 years now, and he's continuing to eat their lunch. And I hope that someday soon, somebody comes and they start, maybe they get a couple wins against Matt and his team. Maybe they get a couple wins because you know what that means? There's more competition in market, and there's better competition. There's better lenders for us to bring our clients to. And here's the deal, man. Here's the deal. And we'll get into this article he posted so we can highlight some of what Mike says. But I would be willing to guess that Matt Ishbia won't even respond to Mike Fawaz. Now, if Dan Gilbert said it, he might respond, but Matt Ishbia is not going to punch down. You're just the executive vice president of wholesale, which to Rocket, they don't give a damn about their wholesale division. So, you got any thoughts on that?
I mean, look, at the end of the day, it's all about competition. And that's what I said before. You need to be working with someone who is going to shop for you. Those numbers that were read about how much of a better deal on average people get for working with a mortgage broker is not there. I mean, that is there for a reason. I mean, there have been multiple studies on it. I mean, look at Realtor.com has studies on it recently.
Hum does $9,400.
Hum does.
Like we will eat any loan officer who's in retail will eat their.
But why is that there? Because you are working with someone who knows the industry in and out, who knows how to get you a good deal, and who has all the options for you.
100%. So
you're not working with someone who's going to tell you one side of the story, and then you're on your own without industry knowledge. You're working with a professional who wants the best for you, who is going to shop for you, who is going to get you the best deal with options, with built-in competition. Because guess what? We have lenders fighting for our business to win what is that going? That will allow us to make sure you get a better experience. First off, I mean, that's UWM. Yeah. That's a big pull of UWM is they have the better technology, which is going to deliver a better experience.
Let's get into Real Clear Policy article that they posted.
Okay.
So everybody gets it. Mortgage brokers are better than retail. So I apologize for cutting you off, but we had just told they know that, right? So, and if they have questions, they should call you, Ben. You've been doing a great job making sure your clients are in the best position possible to succeed, and you will continue to do that. But so this is the article, Real Clear Policy, and this what happens, these mainstream publications, they automatically take retail side or whatever. Like it's a retail bias, and they always have because they don't understand it. So it's a hit piece on Matt Ishbia. And one of the first things they say about him is his fortune has dropped from 13 billion to 7 billion. What has Dan Gilbert's fortune dropped from? Because the whole stock market as a whole is down. So they're trying to tie in, him only being worth 7 billion now. Oh yeah, by the way, he just bought the Phoenix Suns, so I don't think he's too worried about money. They're trying to say, he did something wrong by trying to liquidate some of his funds, holding the vast majority of the voting shares of the UWM. Ishbia convinced the company's board to pay a 10-cent per quarter dividend, essentially creating a multi-million-dollar quarterly annuity for himself. Okay, wild. This is in addition to odd business decisions that seem out of step. Early 2021, he issued an unprecedented, widely unpopular ultimatum so it was March 5th, 2021, saying that they could no longer work with ordering them to cut ties with UWM's top competitors. Actually, the only top competitor was Rocket, and I wouldn't even call them a competitor in the wholesale channel. They're a competitor on the retail side. And limiting options for brokers and consumers. There's more than enough options out there to continue to get your consumer a great deal.
Yeah.
Secondly, when the FHFA agency announced an elimination of the 0.5% adverse market refinance fee, UWM delayed implementing the government's decision banking the proceeds. I don't agree with how this article is slanted. And again, this is a hit piece on Ishbia. Ishbia had a short-lived cryptocurrency for mortgage payment gimmick. I don't think that's a gimmick. I think that's something that they will implement first when the time is right, because cryptocurrency is real. It is not going away. He had to change course within 48 hours of announcing a plan to sell additional 50 million shares of UWM when the top stock tanked on the news. Okay, so he didn't sell his shares of UWM so that the top stock wouldn't tank, so that he protected the investors in UWM. Sounds like a good thing to me. And perhaps the concerning the company's COVID-19 policy has led employees to publicly voice their concerns since the pandemic's early days. Those employees don't have to work there. And you go on to talk about how he had people in the office during whatever, man. The employees don't have to work there. They can quit and find a job somewhere else, especially during those 2020 pandemic days, because everybody was hiring because the market was going wild. And now it appears he's breaking into the loan origination space to compete with. This is what I have the problem with. This is how I know this is a Rocket published hit piece, a Rocket funded published hit piece. That's a lot. A Philadelphia-based company run by disgraced former trade association executive Anthony Casa has recently emerged with Ishbia's fingerprints all over it. Casa's U-Mortgage, which was registered with the state of Michigan as a premier processing, was established by Suzanne Okun. Okun has ties to UWM's predecessor, United Shore, where she worked as a consultant for years. In addition, an attorney for Ishbia and Gaglard, Matt Ishbia's father's law firm, was listed as a resident agent for Premier Processing. On incorporation documents, ties between UWM and UMortgage extend deep into companies' ranks of LOs, including UWM recognized top LOs in California and the Pacific Northwest. UMortgage even employs one in Michigan who recently called UWM home and credits Matt Ishbia with mentoring him while he was an employee at UWM. Further, UMortgage appears to be closely following in the footsteps of UWM, hiring top-ranking trainer and coach to develop end-to-end learning experience for LOs, leadership, and employees. I'm going to stop just right there and make a comment. Okay, so somebody is loyal to UWM for all the trainings and everything they learned, and they're like, yeah, that's like a home to me. Like, come on. Like, and now you're putting this into the article as if he's calling it home and that's where he's going to send all his, like, I just don't believe that because I know UMortgage sends their business elsewhere. That data is public. So that's one. Number two, to say that UMortgage is following closely in UWM's footsteps, well, they should. UWM is the best at what they do, and if you can follow that blueprint and be successful yourself, they should. Oh, and they hired a top trainer to develop end-to-end trainings for all their employees so that they have the best process and like they should be doing that. And this is a competitor of ours in this market because there's other UMortgage people here that we've competed against and won business from. I'm sure they've won some business from us. But at the end of the day, like this is a company that is training their employees to try to be the best, and they're creating more competition in the market. But you're saying that somehow UWM is tied to them because Anthony Casa, who's friends with Ishbia, used Ishbia's dad's law firm to form the documents, and a former top exec at UWM left to help form UMortgage. Like, does that not seem like a stretch to you?
That seems like a big stretch. And I mean, we know for a fact that UMortgage is signed up with other lenders that
and sending business elsewhere.
Right.
Oh, it gets better. So one certainly has to wonder how Anthony Casa, with litigation still pending for making a series of obscene and misogynistic comments and videos, sending them to friends, could build a national broker organization when after he was forced to resign from his role as chairman of the Association of Independent Mortgage Brokers, AIM. So he made some stuff. He said some stuff he shouldn't have said. Got it. So should he never work again? Should he not be allowed to start his own business? Like, that's what I don't understand with that. Okay. At some point, people need to move on. Like, I get it. There's litigation. The lawsuit is going to be filed. It's going to be settled. Whatever happens.
I am not an Anthony Casa fan, but he has every right to do everything he's doing. Like,
100%.
How can you say he's not?
100%. It's not too much of a stretch to think that Ishbia isn't just underwriting mortgages, that he's likely underwriting this venture too. UMortgage's branding is eerily similar to Ishbia's endeavors, including United Short and United Wholesale. Of course, because half the people who work there were at UWM at one point. And of course, UWM is the best at what they do. So guess what happens when you're the best? People start following your model.
Right.
It's just absolutely wild. And then they go on to talk about New York State, blah, 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 blah. Casa's UMortgage markets itself as a purpose-driven mortgage company committed to powering loan originators with long-term sustainable success with license in 39 states, set up their own legacy. Matt Ishbia was recently featured at UMortgage's virtual sales meeting, telling UMortgage LOs to feel good because they are part of one of the fastest-growing mortgage companies out there and will soon be one of the biggest, if not the biggest, mortgage companies in America for a mortgage broker's perspective over the next 2 to 3 years. With his trademark brash enthusiasm, one has to wonder if Ishbia has more to gain by UMortgage success. You've got great leaders, as Ishbia said, referring to Casa. You've got UWM as a partner. We've got your back. You continue. Partners help partners win. That's the article that was apparently exposing. So it seems like Matt Ishbia pointed out facts of Rocket actually trying to compete in the marketplace, and then they maybe paid the journalist or told the journalist to write this or something, like, because that's a terrible article.
Yes.
One of the worst I've ever seen. It's a hit piece on Matt Ishbia that is probably retail driven with a bunch of retail lenders backing the hit piece. And then on top of it, you go and you make some very vague statements with no factual backing up of anything that you're saying and try to say that Matt Ishbia is funding and doing and building UMortgage. I'm sorry, but do people forget that Anthony Casa had one of the biggest mortgage broker shops on the East Coast and in the entire industry for a long time? Do they forget that?
I mean, he's been big for a long time, and that has nothing to do with. I mean, other than the AIM stuff, like, what does UWM have done anything for his career?
And I would say that he benefited UWM and AIM a bunch.
Yeah.
A bunch.
And that was mutually, beneficial.
A bunch. It was very mutually beneficial. And, that's just a stretch. But Do you have anything else on that? Because I want to get out of this because
we've been going on for I mean, we could be going on all day on this. There is just so much content.
I would love to have Anthony on or Matt Ishbia on, or I'll even take Mike Faraz or anybody from Quicken. I would love to have them on and explain their side of it, because there's a bunch of things you can do. Like, there's a bunch of questions I have. Like, Mike, man, like, what are you posting? I understand you eat the dog food, you eat the bag of dog food, you put that dog gravy on it, but like at the end of the day, and great, toe the company line, you're a great soldier, like, you know. But at the end of the day, man, like, if you can't see how Rocket in the community is competing directly with me and Ben and my team here, you're blind and you're in denial. And maybe Matt and Anthony, maybe that's true. And if that is true, well, okay, we're going to have to compete with Anthony Costa, whether or not UMortgage or UWM is copying them or helping them anyways. We're going to compete with them, just like, but at least he's not a $1 billion organization with Super Bowl ads. You know what I'm saying?
Right.
Like, so, like, I would love them. I would love anybody at Quicken or Rocket. They were called Quicken when I was there. Anybody at Rocket to come on and have a conversation, but they won't. They won't. There's no upside for them because there's no upside. And listen, nowadays in today's day and age, nobody has the backbone to come on and defend their beliefs. They don't want hard questions. They want the softballs. They go on Squawk Box, but they have pre-scripted questions before they get onto Squawk Box. Come on to a place to where we're actually going to make you a little bit uncomfortable to answer the questions. I'm sure do you think the broker community would like it? I think the broker community would love to hear it. And that goes for Matt Ishbia too, because I will ask him directly about this article, and he's going to say it's a hit piece because that's what it is. But I will ask him directly about that. I would love to ask him directly about that. I also want to know what's going to happen, like with the Suns versus the Cavs. You know, and the other question is, do you think these guys really hate each other?
Yes, I do. And honestly, I think I saw there was an interview. I don't know if Bill Simmons.
Yes.
Did an interview with Matt Ishbia, who, and I think the quote from that sums it up extremely well. This is the best I think this is probably the truth. Matt Ishbia asking about his relationship with Dan Gilbert said, "I can talk about this for hours, but I'll sum it up in a minute. He doesn't like me and I don't like him. That's how it is. His company used to be number one. UWM, my business, is now number one. I don't like the way they do business in a lot of things, and I'm sure they do not like the way we do business in some things. We're in the same town. We compete. We're winning right now, and that's how it is."
I mean,
I think that's a great quote. I mean, and I really think that sums it up. Is like, look, I don't think they're sitting here, oh, we hate each other, like we're getting all personal. At the same time, though, they both want to win. And they both are competing and want to win.
Will there ever be a point where they're both no longer directly involved with those companies, where they take a step back?
Well, I think Dan Gilbert's already to that point after his stroke.
So I don't think Dan holds the resentment that Matt's currently holding.
No. I mean, I think, well, and especially after he had a stroke and like, because I just don't see him taking nearly as much of a direct
And let me say this, I have a
role.
lot of respect for it, because it sounds like I came off a little bit anti-Rocket, but I have a lot of respect for Rocket. I've learned a lot at Rocket. I have a ton of respect for Dan Gilbert.
Both of a bunch of high-end people in this industry, in the wholesale industry, were learned what they know from Quicken.
And the whole Rocket UWM beef, they say, started because a lot of the Rocket people went over to help make UWM what it is. So here's the deal, though. I don't understand like Mike Faraz or whatever his name is.
Yeah.
I don't understand taking that hard of a line without posting anything factual. That's what I don't understand. Like, show me the proof.
Right.
Because I can show you the proof where Rocket's in my community, where Rocket's advertising on TV, to show me the proof. So that, and like when I say eat their own dog food, like, I think that's great. You should. But at the same time, it's like, dude, like, you're not Dan Gilbert. Matt Ishbia probably doesn't even know who you are.
He probably does, but at the same time,
think?
Yeah, but he also started the same thing with Austin. They started on the retail side at Quicken.
Right, they're retail people.
Start first off and then moved over. But I mean, look, we've talked about this a ton. We could go on it for way more.
One more thing.
Yeah.
You know what everyone should do?
What should they do?
Bang that red subscribe button and turn on the notifications. And if you haven't done it already, go to all of our social media. We're NBI Financial Group LLC on everything. That's all social media platforms, even the Chinese-funded TikTok. We love it. We love it. We absolutely do. People love me on there. They are just so nice, and I can't wait to read your comments and respond to them a little bit later. But you know what else we're doing, Ben? Because we're technically in a recession and people need jobs and interest rates keep going up and the Saudis keep spiking the gas price while they're buying the PGA Tour, we're going to give away $1,000 in either cash or Bitcoin, because unlike that article we just read, Bitcoin is here to stay. So all you have to do is you have to go to our YouTube channel, bang the red subscribe button, turn on notifications, and comment a meaningful post about any of our videos and leave your Instagram handle at the end. The more videos that you have a meaningful post on, the more entries you get. What's that mean? Don't say, hey, great video, Nick. Hey, guess what? I know it's a great video. Give us your thoughts. And then you'll be entered to win $1,000 cash. But I would take the Bitcoin, especially after the BRICS nations came out. I'm just saying. All right, Ben, what's next?
So kind of going off of that, because one thing that they were directly competing with is they both released a new program, a conventional 1% down payment assistance. UWM and Rocket.
No, UWM did first and Rocket came second because Rocket's reactive.
But anyway. They both have done it, released this program. Part of this program is that there were income stipulations.
AMI, area median income.
Right.
That's what AMI
You have to be below the average median income of your county to qualify for this.
Below it, yes.
Below it, yes. Same thing with like there's other first-time home buyer programs out there like Home Possible, Home Ready. Fannie and Freddie have those. But those income requirements are actually raising in the Carolinas. Nick, I know you looking up the.
Yeah, I am.
Because I know he has the exact numbers. Because a lot more people are going to qualify with this.
So let's talk a little bit about the Carolinas.
Let's hear it.
Right. So if you're a first-time home buyer and you want to get on conventional, which I like conventional, and you want to put 1% down payment on, I like that too. And the reason I like conventional is because once you get to 78%, the mortgage insurance falls off. Whereas FHA, it's on for the life of the loan.
Right.
But FHA could also be a great option as well. I believe in home ownership. However you get there, we'll coach you on that. But here's the deal. Area median income, AMI, went up about 10K in the average county in North Carolina. South Carolina, it went up on average 7K. And here's what I'm going to do real quick. And this is a shout out to Greenwood, South Carolina. We went to school about 20 minutes from there, Lake Greenwood. Yeah. It's a beautiful lake. And the people down there, they're a little bit slower because they are in low, mid South Carolina. Like when I came from New York down there, it was a different world, but we love them. Shout out to all my people who I went to college with. Ivy Shingler, he's down in Greenwood. Ivy, I still think you're a little slower, but I love you. Greenville got a 20K increase in area median income. And when I'm saying slow, I'm just, ribbing my friends. I'm really kidding about that. The people in South Carolina are great. That's why we do business here. We love our Carolinians, and we are the premier mortgage lender in Carolinas. But yeah, so this is a huge opportunity for everybody who's looking to buy a home and needs a little bit of down payment assistance to get into a conventional 1% program. If you have any questions, reach out to us. Area median income going up means, guess what? The people are making more money in those counties, and more money is never a bad thing.
Nope.
They'll probably make it rain at Applebee's next Friday. Because that's about all that was there.
That's right.
I'm kidding. I was in Clinton, not Greenwood. So.
I mean, this is just another tool that mortgage brokers have to help people get into homes. Yes. And this is just two lenders. We have a full 3.5% down payment plan with through an FHA program with another lender. That's the full down payment is a forgivable grant. We have plenty of options, and how we do that is through all of our partnerships. So wanted to mention that and then get into some other numbers, some actual news in the economy.
What's going on in the economy? Is it the jobs numbers?
It is.
Did we get a good jobs report, meaning a bunch of people were laid off, so that Jerome Powell and my girl, what's her? She's really hot, Janet Yellen. What's her name? Hey, Brennan. Brennan's our new, he's our intern. He's our video guy. Brennan, if you haven't seen Janet Yellen, she's a smoke show. Look her up real quick. I kind of have a crush on her. Don't tell my wife. But anyways, Ben, go ahead. What's going on in the jobs?
As always, it's going to depend on what numbers you look at, right? Because, you're going to see all these people, the economy is increasing because job employment rose by 339,000 compared to April, according to the Bureau of Labor Statistics. So there are more jobs, more people employed. However,
they're going to adjust that.
However, at the end of the day, you have to see where's that number coming from, because also jobless claims went up to 2-year highs of 261,000.
Oh, wow.
So there's just more people are re-entering the labor market. And why is that? Because more people are getting laid off. So you actually need to look at the numbers, take a look at them, see what's going on, because at the end of the day, and what's probably going to happen.
What's going on? Get into detail for all our TikTokers. They aren't very smart, so we need to tell them what's going on.
That people are getting laid off. I mean, plain and simple. People are.
But when you say they're
jobs,
re-entering the job market, explain that.
That means that people who have been laid off are finally finding new jobs. A lot of them at less of a pay rate of what they were before. So they are making less money. Because at the end of the day, when you're looking at the economy and you're looking at it, oh, great, everyone found a job. But if you're trying to provide for a family of 4 or 5 or 6 and having to take a job at a restaurant waiting tables just to try to meet, when you've spent however many years in a business setting being able to provide for your family, that's not a good thing for the economy. So just looking at one number and saying, oh, okay, and jobs are up, we're going to base off of that. That's not how things should be done. Now, what is the Fed going to do? That's the $1 million question. Because
I know what they're going to do. They're going to fuck it up.
Because and that's my biggest fear right now. They're going to look at this number and say, oh, inflation. People are still getting employed. We need to fight this. This is going to cause more inflation. We need to fight this by raising interest rates again. Regardless of the bank failures, regardless of all the layoffs that have happened, if they try to raise interest rates again, they are just so far behind.
I think they're going to try and spike interest rates again. But what people need to understand, just because they spike the interest rate up by a quarter point, it doesn't mean the actual interest rates are going up. They're doing the overnight bank rate. Now, a couple of things, and shout out to TikTok. I don't really think you guys are dumb. I'm dumb. And that's why I need Ben to break this down for me. I think you're ignorant, which means you just don't know. So we're trying to get rid of the ignorance. So I won't call people dumb anymore. I'll just call them ignorant. Secondly, Ben's like a Rain Man, and that's not an insult. I know Rain Man was a little bit on the spectrum. It's a compliment because I'm talking about the smart aspects of Rain Man. So he sometimes can explain stuff and it's high level. So I have to bring him back and when I say TikTok, it just seems that you guys are the ones that have the hardest time understanding stuff compared to the other social media platforms. So that's why I say TikTok. But anyways, and probably YouTube Shorts too. You guys are second on the list. Like if I had to make a list of the people with the most uneducated comments, it'd be TikTok or YouTube Shorts too. But anyway, but you're also getting the shortest form media, so you don't have a full overview of what we're actually doing. So if you want to get a full overview and not be ignorant anymore, just make sure you watch the full episode. I wanted to get into something too that you mentioned with families, people going into lower paying jobs with less hours, like restaurant industry. Great job. I started in the restaurant industry. You make a lot of money doing that.
Oh, there's nothing wrong with it. It's just
but I wanted to make a comment on that. You go from making $100,000, $200,000 a year to losing your job. Maybe you're making 120, you lose your job, you have to support a family of 6, you're in a house that was a $200,000 a year house, and now you have to figure that out. Well, you know what's happening, right? And where we are trying to help people, and where I think we're on the forefront of this, is consumer debt is the highest it's been in the 13 years I've been in this industry. So consumer debt, credit cards, things of that nature are the highest they've been in the 13 years since I've been in this industry. But that's just the highest equity in homes. So what we've been doing for our realtors is, hey, we're a listing lender. What's that mean? If you need to change homes, or you want to buy a new home, or you need to upgrade, or if you need to downgrade, we will take a look and give you a free credit review. Like look at your credit and give you a free review, compare it to your equity, and show you how you can actually still purchase a new home in this market, even with the higher interest rates, at less of a monthly obligation. I think that is something that people need to think about. And when you pay off all those other debts and you're in your new home and you have less money coming out of your pocket every month, don't run that debt back up. See, discipline is freedom, folks. And I was talking to my wife about this last night. Discipline is freedom. Discipline means that you are going to follow a budget. You're going to stick to it. You're not going to run up credit cards. Maybe you cook at home. No more Taco Bell trips at 12 o'clock at night. I'm talking to myself with that one. I love Taco Bell, by the way. I've been working out though. Got to lose a few lbs, but so you really need to stay disciplined. Discipline is going to be freedom. Anybody who's disciplined does really well at things, right? Discipline, consistency, and we talk about it all the time, and we're all growing. Every person's growing. Get that budget, put it together, come talk to us, and then stay disciplined. And I guarantee you in 5 years from now, you're in a better spot than you were today. We can even teach you how to build wealth through real estate, but it takes discipline.
Right.
I have a saying: faith, family, fitness, finances. Those should be your priority.
Well, I also think they're all interchangeable. not like in an order,
Well,
but
God's gonna strike you down, son.
no, you need each one that will help with the others, is what I mean.
I
like
think-
they all go together. Like
I think there's peers, right? Like there's certain things you can't have. Like if you have all the finances in the world, but you're not in good fitness, and you start having health problems, who cares, right?
right,
Is
but
that what
if,
you mean?
well, no, I mean if you're not in good health, you're not going to have the energy to push yourself to be that successful, to have your finances worked out. If you don't have faith, you're not going to get to that point. I mean, if you don't have faith, you're also not going to believe in yourself to push yourself to get healthy,
Correct.
to get everything else. So I really think if you're lacking in one, it's going to affect the others.
Right.
I just think.
Yeah, and I think that's true 100%. And I think faith is really the biggest thing. And no matter what you believe in, like I'm a Christian, I believe in God, and I have faith that everything's going to be taken care of. But you have to have the faith that things are going to be okay just to start.
Right.
So we can talk about faith at multiple different levels. And like I said, I'm a Christian, even though I make fun of people. People probably don't think I am, but I'm not judging. I'm just joking around. But yeah, that's where my faith and my belief that everything's going to be taken care of comes from. So it allows me to have a clear mind when I go to look at my finances, when I go to work hard at work and bringing more business and help more people get into home ownership. And I do believe I have a calling to get as many people into homes as I possibly can.
Yeah.
At the least amount of cost, because we're not Rocket. We don't want to rip them off. So Ben, do you have anything to tell the people
over there? Yeah, make sure you hit that subscribe button, click the notification bell, and like this video, and leave a comment. Leave a constructive comment. Let's have a conversation. That's what we're here for. I mean, you may not agree with us. Let us know. Like, that's what we are here for. We want to actually have conversations, actually talk to people. We're not going to tell you from one side and say, you better listen to us or else. We're not mainstream media. So please do that, and make sure you follow us on all social media. Reach out to us on social media. I'm Big Boss Ben. This is
Mortgage Man Nick, and my social media team, Donovan, has been doing a great job of showing me cooking and doing all kinds of fun stuff outside of just mortgages.
You cook.
Oh my God, dude, you were at the Super Bowl. Oh no, you weren't. You fake sick. I forgot about that. God. So yeah, no, I did. I cooked for the Super Bowl. I got the smoker in my backyard. The great thing about home ownership is once you own a home, you should buy a Yoder smoker made in the USA. Shout out to Yoder Smokers. And then you should cook, and you should have people over, and you should enjoy your home. I did a pulled pork that day, you fake sick. Can we get into the story about why Ben fake sick real quick, Donovan? Just 2 seconds. So it was the night before the Super Bowl, and Ben's a really good cook. People don't know this. The guy can cook. Well, I needed some help. It was my first pork butt I was making, and which is a staple of the South, something that us upstate New Yorkers didn't know about. And I needed some help from my Southern friend who grew up in the Grand Strand. So all my Myrtle Beach people, this guy's local. And I called him. It was like 8:30. I was like, hey, man, I need your help. Can you run to the store with me for 15 minutes and just show me what I need to do? And he's like, yeah, man, I'll be home in like 20 minutes. I'll give you a call. And it was getting closer. It was a little bit later, 8:30 or so. Well, Ben was tired, and he called me back, and he said, hey, man, I'm throwing up. I can't come. So between the 30 minutes of going to the store with me and calling me back, he got a stomach bug. So I told him, I said, well, if you're sick, you better not come to the Super Bowl party that all of our college friends were coming to as well. And like there was like 30 people. So his wife had to come without him because I would not let faking sick stomach bug Ben come to the Super Bowl party. And Ben, being as stubborn as he is, he held his ground the entire time and did not admit he was lying that he was sick. And to this day has not admitted it, but I know he faked sick.
How do you know? Because I was throwing up.
Mm-hmm.
I'm sure. Slept in a different bed for my wife that night because I got like some sort of bug.
Listen to this story. This guy could be the next Dr. Seuss, write some books with these kind of stories. But anyways, Donovan, Ben told the people to follow us. Now I know you have something for me and Ben to comment on. I'm sure there's all kinds of. We've had a lot of views. How's our social media views doing?
Pretty good. I have a question, Ben. When you were talking about the numbers for employment, was that about jobs?
Mm-hmm.
That's full-time and part-time jobs included.
Correct.
So explain that again, because I think we need the re-entry into the workforce and how that's skewing the numbers. Can you try to break that down? Pretend I'm in kindergarten. I understand what you're saying. I get it, but people who aren't in the industry, who haven't been doing this since they were 21, don't. So how is the numbers being skewed? Break it down. Pretend I'm a little kid and you're Dr. Seuss. Tell me the story.
So you are seeing more people get a job right now. no classifications on what that job is. It can be in any industry. It can be for any amount of time. It can be for any dollar amount. So what you're seeing a lot of people, especially in there's more people in medical industry is up, but as well as the bigger ones are transportation and hospitality right now. Those industry sectors are seeing the most jobs added. If you actually look at where those are coming from, what that means is you're seeing people who are laid off because you're seeing more people out there looking for jobs because guess what? They lost theirs. They are finding jobs because they have to get by. With interest rates up, we just talked about how everyone has the most debt right now than ever before. You have to make ends meet, even if it's not the job that you want, that you're trained for, that you're qualified for. You have to make ends meet for your family. So you're out there taking whatever job you can find, but those numbers don't take that into account. They're just saying, jobs are up, so the economy must be doing well. Well, no, if you actually look for people who are out there looking for jobs, because guess what? They need to make ends meet too. Those numbers are up as well.
The other thing you need to look at too is average hours worked and average wages. Those numbers are down. That's a big thing.
Right.
And people don't understand that. It's just, it's sad because 3 years ago, we had the most equity and the least amount of consumer debt, which means people lost jobs and have had to rely on credit cards. We had the most savings. So they went through their savings first because the savings accounts in America are way down, which is kind of weird that they can track how much combined savings American has, but we'll get that's big brother. But that's down. And then the next thing that went is as soon as that started dropping, I said, watch consumer debt skyrocket because people needed to use credit cards. And the crazy part about it, do you know how hard it is to get like those interest rates are like 23%, 26%. So your monthly interest only payment on a credit card is just at $1,000. It's what, $260?
Yeah.
Imagine that, and you're not even paying down the $1,000. You're just paying $260, so you don't get a 30-day late. So they're just like, and that's real. Like
it is.
Like for even high credit score individuals, they're like 16, 17%. So if you have a 700 credit score, you're probably getting a 15, probably anywhere from a 13 to a 15% to 20% interest rate on a credit card. So people who lost their jobs, who went through the savings, which lowered the overall savings for Americans, they then had to go to their consumer debt, which is credit cards and revolving debt, and pay bills or pay for groceries or pay for gas, or they didn't slow down their spending quick enough because maybe they aren't keeping a budget. Like 3 out of every 5 Americans don't keep a budget. So they didn't realize, oh, shoot, I'm spending way too much on meals and entertainment. And maybe I should cut that back and go grocery shopping a little bit more and cook at home. And they spend it on credit cards. And now it's really hard to get out of that credit card debt.
We never discussed the PPP loan.
Personal, for the businesses?
Yeah. Like, wasn't that like helpful towards the I don't know, because a lot of businesses like failed once COVID went into once COVID like really started.
Yeah,
there were a lot of people who like started a business in like that same year they had to like close it because of COVID. But I would assume that the loans would help. But I guess it was just like it depends on how well your job was doing at the time, right?
Correct. I mean, basically, it was cover payroll for a certain amount of time.
And it wasn't long enough because it depends on the state, but a lot of places it wasn't long enough to cover payroll to keep people employed. So we spent a bunch of money on a Band-Aid fix. They were supposed to, remember, it was 2 weeks to flatten the curve, and then it turned into 2 years, and the curve, and I don't know if they ever got flat. They haven't told us yet. So, and
it was for payroll only. Like restaurants still have to pay the rent for if they're renting their restaurant. If they have to pay for they have other expenses that still they had to pay.
Well, and they probably couldn't. A lot of the owners probably couldn't pay themselves either because if they weren't paying themselves, like paying W-2, I think 1099 was allowed, but I don't know, but it was another excuse for the American government to print a bunch of money and not actually have a solution to the problem. It was just a quick Band-Aid. So they just, I mean,
similar to the 1200, I guess it was
a lot of the things they did then. Because then they had allowed like the forbearance on mortgages, same sort of thing at that time. Because what they would do is not free money. The government was paying it, but then at the end of the day, they would put a lien on your property saying, hey, before you refinance this, sell this, do anything, you have to pay us back. Off. So now you have people that now they have to catch up basically a year's worth of mortgages to do anything to get themselves in a better financial position.
Well, you couldn't get evicted, right? You couldn't get evicted during.
It's correct.
Yeah, so there's an eviction moratorium, which put the landlords, who maybe they were good landlords, maybe they were bad landlords, we don't know. Each one's a different situation, but it put them in a situation to where if they had a mortgage on the property, now they were expected to cover the mortgage, but they had no money coming in. So it was very. I think there was a series of bad decisions made. I think that some of this stuff did help some people in the short term, but I don't think it was ever a long-term solution. I think there's some of the effects are starting to be felt now, because a lot of people got those $1,200 checks too, if depending on what you filed on your taxes. And what they did was they went out and they spent it. Like, guess what happened? That contributed to inflation, because you got a bunch of free money and now you're spending it. Like, the old saying is, don't spend like a drunken sailor, right? It causes inflation. I don't know if that's an old saying. I kind of just made it up now, but we can call it old. But yeah, I mean, that's a whole nother podcast.
That's a complete different podcast.
Yeah.
Somebody made a comment. They said mortgage payments could soon be higher for those with good credit, what some view as a move to level the playing field. Others feel it's penalizing people who have been financially responsible.
Agreed.
Yep.
100%. They're right.
It's a fact.
That wasn't TikTok, was it?
No, YouTube short.
I knew it wasn't TikTok. Yeah, no, that's 100% correct. They're trying to even the playing field, but what's really happening is it's hurting people who have higher credit scores. I've literally priced loans out this week where I was like, it doesn't make sense for you to put 20% down because your interest rate's much better at 15 or 10%. So, if you have a smart mortgage advisor like ourselves, we're going to coach you into that, and then you can just go ahead and recast and knock that PMI off after we close.
Right.
Wow, kind of insane.
Yeah, it is wild.
Yeah, if you have good credit, you still have to pay like a certain amount.
So you're not going to have as high of a interest rate necessarily as a low credit person, but you're just not getting the same benefit that you used to get.
Right.
And it's really credit score combined with what your down payment percentage is. So if you have a high credit score and like a 20-25% down payment, I literally saw an interest rate go from 7.5 to 7.625, and they were putting more money down, and it was a high credit score individual. Like, it was dumb. Like, why would we do that? So,
because they're riskier. They have more equity, so they're riskier.
So really, you're supposed to have a higher interest rate if you're a riskier person, because there's more risk associated with that. So they want to make sure that their business is covered. Now, the other piece is they took the low credit score individual with not a lot of down payment, and they don't have as big of a negative hit now, so they have actually better interest rates. I think you could have probably equaled the playing field by not touching the high credit, high down payment person, and just taking less of a hit on those lower credit, lower down payment. So
improve FHA, which they did too.
They did improve FHA, 30 bips less on mortgage.
So what's the deal on FICO 10T? Because when I was kind of looking at some articles and I was like just skimming it, a lot of people were saying like it's not really a good thing.
FICO 10T.
Yeah, because it's like the new.
The new credit score.
Yeah, because they were saying that they go deeper into like your payment history and stuff. So they said it hurts a lot of people, especially if you have like a bad, I guess, past.
Well, they haven't even finalized what exactly it's going to be yet.
Okay, so people just saying really negative things about it.
Right. When we talked about that, we were just setting it like just from when that could be out there, which was in 2024.
Yeah.
So I mean, that's still a long ways out there.
It could hurt them.
It could, but it depends on.
So what they're talking about, I bet, is like they looked at your debt to credit limits over the past 24 months, and not at just what they are.
Gotcha.
So that's probably what they're talking about. If not, we'll have to look. We can look a little bit more into that and talk about it next. But I just, when you do a quick Google, that's what everybody's highlighting, is like they're looking at your credit usage compared to what your limits are over the past 24 months. So they're digging deeper into that.
So if you had a higher balance anytime over the last 24 months.
So basically the rapid rescores that we can do, if people pay things down, they'll be gone. So there's a lot less people who would get qualified in that sense.
Okay, last topic we're going to get into is we talked about government assistance and not relying on security. But a lot of people kind of like didn't agree with what you said in that situation.
I knew they would.
Someone said government funded, don't you mean self-funded? People pay taxes to get that assistance. Do you agree?
Do I agree with that?
Yeah.
Yeah, I do agree. People pay taxes to quote unquote get that assistance, but then they allowed their government to go in and write a bunch of IOUs to Social Security. Also, people are living a lot longer, and Social Security wasn't set up for that. I always believed in to privatize it, but we didn't privatize it. And it allowed for a lot of, oh, we'll pay the Social Security fund back. Oh, we'll do this, and just look it up. You can Google it. Now, the other piece to it is, yes, the people did fund it with their taxes, but if you believe that the government was going to do the right thing with the money that you put into the Social Security or any money that you really give the government, you haven't been paying attention to the history of governments around the world. And I'm not just talking about the United States government. Just go look at governments around the world. Isn't it true that most governments collapse at around 250 years?
That is true.
Oh, so they must not be very good at sustainability.
Most, yeah.
So why would you give your money to something that's not sustainable? Or trust it, right? So that's why I believe in having a 401k, investing in housing, investing in, it's called diversification.
So the government's not an insurance company.
They aren't.
Like, I mean, that's kind of how I'm taking that comment to mean, is that, oh, well, I've put a certain amount of money down, so they should give me money anytime I need anything.
No, that's not what they're saying. The comment was, don't invest in just Social Security income. You're not ever going to receive it.
I agree.
Right? So I don't think, what's that have to do with insurance, though?
Because they were saying, oh, but it's not government funded because I paid for it too.
He's comparing it to like.
I'm saying, but yeah, you paid for it.
They did pay for it. So I agree with the quote as we gave our money, our tax money we pay a Social Security income tax so that when we retire, if we paid that tax, we're supposed to receive Social Security income. We're
correct,
not going
but
to,
no one is.
No one's going to receive it.
Right.
So why are we still paying the Social Security income tax?
I mean, if someone disagrees, someone say you're not technically paying taxes if you don't have a job.
That's true.
Okay. Well, who says that person doesn't have a job? Now, the next time you get a paycheck, look at it. Social Security income tax comes out of it.
Yeah, there is.
So when you go to retire, you've contributed Social Security income tax, and you're probably not going to receive Social Security income.
Right.
It's going to be dried up. So what they're saying is we paid into this, and now we're not going to get paid out of it. This is what I took from that comment.
Gotcha.
That's bullshit. That has nothing to do with this.
I agree.
An insurance company. That's bullshit. The government mismanaged the funds. The government didn't set the expectations. That's why it should have been privatized years ago. And everyone's screaming, oh, this, that, and other. Like, I will tell you this. If you privatize it and you put stipulations that it has to grow X amount over X amount of years, I guarantee you the people who are managing that fund are not going to do what the U.S. government did and take from the fund, write an IOU, and the money never goes back, or the money never grows like it needs to, because when you take from the fund, guess what? It stops, the compounding interest.
Yeah. So
they really screwed up. The government, listen, everybody knows here I'm about as big of a libertarian as you can get, and pretty close to as capitalistic as you can get, which we do not live in a capitalistic society. It's a mixed economy, and I do think that you have to have a lot of regulation to make sure, we want everything on the up and up. I'm as close as you can get to that before anarchy. We trusted the government with billions and trillions of dollars, and we keep paying the government Social Security income tax, and we're not going to get it. I just don't understand that. That's not saying that the people did anything wrong. No. Like, I'm not saying the people who pay, like, I pay into Social Security income tax. You do.
We all do.
Brendan will. That we deserve to get it, but we're not going to. Like, let's look at the reality of the situation. So set yourselves up financially and do not rely on that as your retirement. Rely on other things. Diversify your investments, because sometimes investments don't work out. Sometimes you lose money on investments. I'm experiencing this right now. I'm not going to get into it, but that it's the truth. And when you lose money on an investment, so be it, because you're diversified and you're going to be making money elsewhere and you're going to be able to survive.
You're betting on the long term of the overall economy.
I'm betting on the long term of all the economies, right?
Yeah.
Like, I'm invested in everything from cryptocurrency to housing to 401k to Social Security, and that is an investment. Your money you pay into Social Security is supposed to be an investment.
Yep. Just not like a long-term thing. I have one last question. This is just me acting personal, but let's say if I were to get like into like a 15-year thing or anything with my mortgage, how often should I like pay in advance? Because I know that you want to pay it off early enough so that you can kind of like, I guess, take the money and put it elsewhere. I know we talked about getting multiple properties, but if I'm like in a 15-year situation, should I pay like, I don't know, 2 or 3 times more in a year?
What's your goal? Like, what's your long-term goal in real estate?
I mean, for right now, I think the main thing is just like primary residence, just maintaining that. And then from there, I can kind of go and figure out what I want to do. But if this is like primary for me, how often like should I pay that?
there's not really one like how much.
So
like, what do you
make,
recommend?
like,
It's not like a right or wrong answer. But
so
like,
what I would recommend is if you only care about primary and you don't want to have investment properties and stuff, pay as many extra payments a year as you can because you'll pay the property off quicker and be debt free. That's what I would recommend.
Way quicker.
Now, if you want to get into investment properties and have rental income, what I would recommend is instead of paying extra payments and instead of going 15-year, I would go 30-year. And then I would take the extra money that I have and put it into a separate account until I had a down payment for a rental property. And then once I had that, I would get that rented out and get people in it and get that creating cash flow for me.
Choose a 30-year.
If you want to build wealth through real estate.
Right. If you want multiple properties.
And you're going to build wealth through real estate either way with a primary.
Right.
But if your goal is to pay it off quicker, to have the least amount of debt, then I think 15-year and pay as many extra payments as you can on it.
Okay.
So,
and it doesn't even have to specifically be other properties. I mean, any sort of investment.
Yeah.
Like that cash flow, having that extra money that you're getting each month, put that into some sort of investment, whether that be the mortgage that you do have, make that so that's paid off earlier, whether that is save up to buy another property, whether that's in the stock market, crypto, whatever, like diversify.
Pay it off and get the kitty condo.
Diversify. Yeah, there you go.
Right. So, yep. But whatever, it's really going to be dependent on your goal. And if your goal is to be just 100% debt free, you make your money, you have so, and I do want to address something that it's been weighing heavy on my heart. Investment properties, I talk about mailbox money and, residual income. It's not technically residual income because there is work that goes into it. So you have to understand that if you have an investment property, there is going to be some type of work to go into it. Now, it's not going to be the same type of work that we do here every day. We're here 40 hours a week, if not more. We're calling people, we're bringing in business, we're helping people. That's our day-to-day job. The investment property is a secondary investment, but we have to fix the property up. We have to go to closings. We have to get tenants in there. We have to answer tenant questions. Like, it's just not as much as you would on a day-to-day basis unless you get to a certain point, right? So understand that too. So some people maybe don't want the extra work. They just want the peace of mind of getting a pay stub W-2 and having no debt. And if that's what you want, man, that's a great life.
Right.
Go live it.
Right.
It's not for everyone.
And that's the thing is like that's what you're saying is there's not one answer for everyone.
Right.
It depends on the person. It depends on how much extra income do you make a month. Like on top
that's
of
why I asked what his goals
on
were.
Top of that's the perfect first question.
So
that's
what's
what
your
we
goals?
do, and that's our job is when we speak with the client, hey, what are you trying to do? How can I help you achieve your goals?
My goal is to get out of this podcast. So I have a lot to do this afternoon, guys. I appreciate everybody who joined us. If you have not done it yet, go ahead and bang that red subscribe button. Turn on the notification. And don't forget to leave a comment because we are generous people here. And we know you're not going to collect Social Security income. So what we're going to do is we're going to allow you to a different form of investment. If you bang the red subscribe button, turn on your notifications, if you comment on our videos with a meaningful comment, not just, hey, great video, Nick, we know, a meaningful comment, put your Instagram handle at the end, you will be entered into a drawing to win $1,000, and that giveaway is going to be on September 1st, and you'll have the choice of Bitcoin, which that's going to be here still in the long run, or US dollars, and we don't know. So go ahead, bang right, subscribe, turn on notifications, leave a comment, follow us on all our social media. You can follow us at NBI Finance Group LLC on all of them. I'm Mortgage Man Nick on all of them. This is Big Boss Ben, except on Instagram because he refuses to change his handle. All right, we're